Who needs to file income tax return? What are the consequences if the income tax return is not filed? All individuals must be aware of filing the income tax return. But during the ITR season, some people intentionally or mistakenly skip filing the income tax return. This is because they miss the due dates or don't want to pay the income tax to the government. Who all really required to file the income tax return? Let's first understand who all are required to file the income tax return. For the following list of assessees, filing of income tax return is mandatory. 1. Every individual with a gross total income above 2,50,000 rupees, 3 lakhs rupees in case of senior citizens, and 5 lakh rupees in case of super senior citizens. 2. Individuals with annual sales or turnover of 60 lakhs rupees or more. 3. If the professional income exceeds 10 lakhs rupees during the year. 4. If TDS or TCS deducted in case of an individual above 25,000 rupees and 50,000 rupees in case of senior citizens. 5. If the deposits in one or more saving accounts during the previous year is at least 50 lakhs rupees. 6. If the deposits in one or more current accounts maintained with a bank or cooperative bank exceed 1 crore rupees. 7. Individual who has spent 12 lakhs rupees or more on foreign country travel. 8. Individual who has paid electricity bill exceeding 1 lakh rupees during a financial year. 9. If the individual is having income from foreign sources. 10. If the individual is having any asset, including financial interest, in an entity located outside India. What happens if the income tax return ID not filed? Now, let's understand what if the income tax return is not filed by the assessees whom the filing of income tax return is mandatory. Penalty and interest. If the return is filed after the due date, then you need to pay late fees which can range from 1,000 rupees to 10,000 rupees depending on the amount of taxable income. Interest is also applicable on the tax amount at the rate of 1% per month until you file your ITR. No carry forward of losses. The taxpayer will not be able to carry forward the losses, business loss or capital gain loss, or claim the benefit of deductions if the ITR is not filed, except loss from house property. Penalty prosecution. Not filing the ITR can attract serious consequences, also in terms of penalty and prosecution. The Income Tax Department can consider it as a tax evasion motive, and they have the power to levy a penalty on account of underreporting of income, which will be 50% of the tax avoided. They can also initiate prosecution wherein the taxpayer may be subject to imprisonment for a term of minimum of 3 months to 2 years along with a fine depending upon the amount. Loan applications. Loan applications can be complicated due to the non-filing of income tax returns, as almost all the banks require income declarations to know the financial capabilities of a person. Therefore, an income tax return is of utmost importance if you need to obtain a loan. Best Judgment Assessment. Section 144. Non-filing of ITR can result in a best judgment assessment by the Income Tax Authority, which is done by income tax officers on the basis of all relevant material he has gathered. Refund of taxes. In case the tax payable is less than the tax deducted, then the taxpayer can claim a refund of such excess amount, but if the return is not filed, then the chances of getting a refund will not be there. One must note that non-filing of income tax returns is a serious offense, and non-compliance with it can attract huge penalties. Hence, every taxpayer must file their return within due time to avoid such consequences. Thank you for watching. Do subscribe to my channel for regular updates.